Let's analyse it all for you now from a business perspective. Our business editor, Brian Quinn, is with me. As I said, right at the very top, the oil price has really been soaring, hasn't it, Brian?
Indeed, Stuart, as you pointed out, crude oil prices hitting their highest level since the start of the Ukraine war some 4 years ago. International benchmark Brent crude jumped more than 6% earlier as it passed $126 a barrel. That has since settled back a bit to trade at nearly $124, though. West Texas Intermediate is up around 2.3%. It's more than $109 a barrel. The price spikes coming on the heels of President Donald Trump warning that the U.S. naval blockade on the Strait of Hormuz could drag on for months. Now, prior to the launch of the U.S. and Israel's bombing campaign, Brent had been trading at around $70 a barrel. Iran's strikes on the oil facilities of U.S. allies in the region and its attacks on tanker ships trying to cross that narrow Strait of Hormuz have cut off some 20% of the world's oil and gas supplies. Meanwhile, the U.S. blockade on Iran has stopped Iranian tankers from delivering crude to customers like India and China. The shutdown causing pain not just for drivers around the world, but industries as well, including agriculture and plastics, both of which rely on petroleum byproducts for their raw materials. Now, analysts say that the spike is likely to be driving inflationary pressures across nearly all sectors of the world economy for the foreseeable future. Take a listen here.
General feel of geopolitical disruptions around the world is just growing. I think there will be somewhat of a lengthy inflationary period, maybe over these next 12 to 18 months because of the Iran war.
So how's it affecting the wider markets, Brian?
Well, Asian stock markets are definitely reacting to those moves on the oil and commodities markets, as well as reports that the U.S. Is preparing potential new strikes on Iran. Nearly all major indexes in the red on Thursday. The Nikkei in Tokyo coming back from a trading holiday to lose around 1.33%. Hong Kong and Seoul each down more than a full percent. Only Shanghai managing to keep its head above water. The European markets have just opened. They're losing some ground as well. We'll be tracking those throughout the day for you.
Now, that inflationary pressure that we mentioned earlier, no doubt weighing as well on the next chairman of the U.S. Federal Reserve as well.
Well, current chair Jerome Powell delivered what is likely to be his final press conference as leader of America's central bank on Thursday. The Fed holding interest rates steady at 3.5% to 3.75% for the third straight meeting as it continues to defy calls from President Trump to cut rates in a bid to boost economic growth. That presser came just after the Senate Banking Committee voted to advance the nomination of Powell's successor, Kevin Warsh. Trump will be looking for Warsh to push for rate cuts where Powell had refused. He may end up disappointed, though. Warsh is going to be overseeing a 7-member Fed board that has already signaled resistance to cuts in the current economic environment where runaway inflation remains a serious risk. Meanwhile, Powell himself will be staying on as a regular board member, seeking to ensure that the Fed remains independent in the face of political leaders like Trump, whose administration launched a criminal investigation into Powell in an apparent bid to pressure him.
Of course, if we didn't have this Iran war and the specter of higher inflation being caused by higher oil prices across the globe here, I do think that maybe he would have made a very quiet exit here, but I do think that he believes that the job is not done and he needs to do some more work.
And finally, from Brian, the war in Iran and the subsequent higher oil prices, not bad news for everyone, of course, notably oil companies.
Surprise, surprise, Stuart. British oil giant BP announced this week that its profits for the first quarter of the year had quadrupled. French oil major TotalEnergies, for its part, has reported a 51% rise in quarterly profits, some $5.8 billion over just 3 months. That massive windfall is leading to mounting calls for France to levy a windfall tax on oil company super profits. Juliette Brown reports.
Activists gathered near a TotalEnergies petrol station in Paris on Wednesday to protest what they consider obscene super profits reaped by the energy giant. The French oil and gas company announced its net profit had risen by more than 50% in the first quarter of 2026, hitting $5.8 billion.
While there are people losing their lives in the conflict in Iran, while there are millions of French people struggling, unable to make ends meet, because energy bills are soaring and food prices are breaking all records, TotalEnergies is lining its pockets with complete impunity and with the complicity of the French government.
The French government says it's considering new measures to tackle rising fuel prices, from new taxes to further price caps.
TotalEnergies needs to position itself, one way or another, on a method of redistribution, and potentially in the most effective way possible, the fastest way, in its commercial policy.
The French Socialist Party is calling for a tax on windfall profits, while the far right says Total is a business, not a charity, and has no reason to give money away. The energy giant pointed out that it has put a ceiling on fuel prices at French stations. But campaigners say that with consumers struggling and profits soaring, that's just not enough.